Eric Muadid, Muadid.com for the weekend market analysis for the US market for the weekend of June 13th and June 14th, 2015. Let's take a look how the markets closed on Friday. We see pretty much a down day. Dow down 0.78, NASDAQ down 0.62, S&P 500 was down 0.70, and we see that oil was down 1.33, and the VIX was up about 7.24%. For the week, the S&P 500 was pretty much unchanged. For the week, the Dow was up slightly, 0.28%. And for the week, the NASDAQ was down slightly, down 0.34%. So net, the market was pretty much unchanged this past week. If we take a look at the NASDAQ, we see that we've been trading just like most of the markets in a range. So we are stuck in a range over the last couple of weeks. And honestly, it's tough to tell which way the market wants to go when you're stuck in a range. You can call it either way, but end result of the day is that the market is still sideways. One thing we can see here is that we failed to hold the breakout level there at 5092.02, so 5092.09. That one has failed, the weekly breakout, but that doesn't mean that the market cannot break out at any point. So yes, sideways, recently failed to hold breakout levels, but we are still trading around an upward sloping 10-week moving average, which is generally good as far as the RSI is concerned, and could also explain why the market is moving sideways. On the weekly RSI, we generally are trading within this wedge, and as long as the market is trading within this wedge, prices should be a little bit range bound. Otherwise, if we can move above or below that wedge, that might give us a direction into the next swing trade. Take a look at the NASDAQ daily, and we can see the daily here clearly showing recent attempts to break out have failed, and failed breakouts are notorious for taking markets lower, but we are still trading above the 50-day moving average. So on the top side, there's price resistance at the highs, but on the recent lows, the market is coming back to test the 50-day moving average and holding. So really net sideways market. If we take a look at the daily, we see that recently, whenever we've been trying to move higher, market's been coming back to this top side of the RSI and showing resistance, and every time the market's been trying to be on a sell-off, it comes to both of these lines. So line number one, the green line, and also on the blue line here, where the market has been holding support over the last, let's call it throughout 2015. So as long as we have support on the downside and resistance on the top side, this might explain why we are range bound over the last couple of weeks. Let's take a look at the Dow weekly. And even as far as the Dow weekly is concerned, we can see here we've been in a range since about March of this year. Market's been trading pretty much in this general area, and eventually we might move away from this wedge with a move lower to begin a trend lower, or we might break out after this sideways consolidation. As far as the RSI is concerned, again, we can see about 2 weeks ago we had come back to the top side of this line, and we saw it hit that line, and since then the market's been pulling back. And on the support line, every time market's been coming down here, it's been holding on this line. So we did end the week exactly on the line. If we hold, that's good, but if we break below the 50 level on a week-to-week basis, expect the market to be on a strong pullback. Also, just keep in mind that holding above this line and holding above 50 is what the bulls want to see. If you want to see the markets go lower with a bearish move, it needs to break that support it's been showing around the 50 level on the weekly RSI. If we take a look at the Dow, again we see this evidence of sideways action generally in this range. So we've been trading in this range for a while, as you can see. So really tough to tell which way the market wants to go for now with that sideways action. Every time we come to the tops, we've been finding resistance around this level here. As you can see, the most recent top came when the market hit that level, which was the current highs as far as the Dow is concerned. And every time the market's been pulling back, it's been finding nice support on this green line, and also been finding support on the line connecting recent RSI lows going back to early 2014. So this line is where the market came back recently. It held, and once it held, it had a nice move. So we are generally stuck in those two extremes, and as of right now, it seems like the market was unable to move above the 50-day moving average. So we are stuck between the 200-day moving average and the 50-day moving average. Again, another evidence of sideways action. If we take a look at the Dow on the hourly, if we draw a line connecting recent highs, as of the highs of the past week, the market did come exactly back to the level where we've been seeing resistance. It hit that level, which was the highs for the week, I think was on Wednesday, and since then, or early Thursday morning. And once the market hit those highs, we've been seeing a pullback, and yet off the lows of the week, the market had hit this green line and also this line connecting recent hourly RSI lows. So we seem to be range bound, and depending on which indicator you're looking at, either way, you find that on the top side there's obvious resistance, and on the bottom side there's good support, which might be explaining why we've been range bound over the last 2-3 months. If we take a look at the Dow Transports, we can see here a couple of arguments. There could be an argument here that this line we discussed last weekend is holding, and as long as that's holding, and the market might have a chance of bouncing. So this line held on the weekly RSI, and this line is where it began the nice move. So this breakout here in the RSI began off the lows, and the market went on a nice run, and we did come back and test that line. So of course we had a nice run off this entry, which happens to be around here, and since then we see that the market's been using this level for short-term support, and it held over the last 2 weeks. So as long as it is holding above that, that's good. The one thing is we have to be very aware that we are trading, a situation where the market could easily break down. We have the 13-week moving average and the 34-week moving average giving us a bearish crossover here, which is not a good sign unless the market can correct that. And we can also see that previously, when the market had this nice move early 2013, there was a crossover which was bullish between the 13-week moving average and the 34-week moving average. So yes, market has a little bit of a stability based on support on the weekly RSI, but this does not mean that it cannot break. And also, as I just mentioned, the problem here is that now we have a bearish crossover here. This crossover could be indicating the possibility that the market can decide to actually break down even after it has found short-term support. As far as the weekly RSI is concerned, the Dow Transports needs to be above this line, because this is where it's been finding support ever since it broke out here. After moving above this line here, the market has been using the same line on a back test to successfully bounce after short and shallow pullbacks. So this needs to be back above that line, otherwise this back test could fail, suggesting that finally the market has lost momentum and could actually be setting up for lower prices. If we take a look at the daily for the Dow Transports, I don't know that you can see this, but there's a cross here between the 50-day moving average. So 50-day moving average cutting through the 200-day moving average. So that's a bearish cross also. Again, another indication that the market could easily break down, even though let's not be too quick to decide that. But it seems like we are breaking some major and giving some major red flags is what I'm trying to say. But on the daily, market had come back to test this line on the daily and held. So we saw support off the lows here, market held, and again during the week it also held these lows, and we seem to be bouncing nicely on this line where the market has been finding stability. So if the market can continue holding above those two lines, then eventually it could see higher prices. Otherwise, we have to be aware if it decides to break that line, the green line and the blue line, if both lines are broken, then that would suggest that yes, this cross is not good and could be indicating much lower prices. In fact, if you take a look at the Dow Transports from a weekly standpoint, the RSI at the highs for the week only managed to come back to where it's been finding resistance on this declining line, which is most recent highs. So yes, the RSI on the hourly doesn't look great. Every time the market's been trying to move higher, as far as the transports are concerned, we seem to be coming back to this declining line of resistance, which might be indicating that we're in a phase where market is going through a stair-step case of making lower lows over a period of time. Unless the market can break out above this declining RSI line of resistance, so unless it can break out, indication here is that this market is not very healthy. We can also see that we had recently broken below this support zone where the market was and had been using this for support over a period of months. As you can see here, all this held, but finally we broke below that, and ever since that break, you can see that the market has been, ever since this break here, market has been unable to move back above the blue line. So this has become resistance, and this is even making a lower low. Indication is that at this rate we could easily break lower. So the odds are still there that even though it is showing some signs of stability on some levels, but yes, we can see that this could easily develop into a more serious correction. A quick look at the S&P 500 daily, and we can see on the top side, number one, we are still trading in this range. Generally speaking, market's been trading in this range, and really nothing has been taking place net. Yes, a lot of up and down action, but we are still range bound. If you take a look at that, you can see that on the daily RSI, every time we try and move higher, market's been coming back to this level and showing resistance, and every time we are attempting to sell off, we've been coming back to this line connecting recent RSI lows, and we've been holding support. So between those two, eventually we might either break down below the support line and go lower, or the market could find enough energy to break out and see higher prices. If we take a look at Apple weekly, on the weekly chart, we can just want to point out a couple of things. We can see recently we made a higher high on a weekly chart, so improving price highs on a weekly basis, but we made a lower low on the weekly RSI. That could be setting up for much lower prices because of this seemingly innocent negative divergence. Also, this can also be seen on the daily with Apple showing a slight intraday high here, higher than the previous high from this level. So that was an improvement in closing highs, but we can see that the RSI had made a lower low if you draw the line like that. So let me draw that again. So we made a slight higher high on the daily there, but you can see the RSI made a lower low. This is probably one of the reasons why the stock is off the highs, but we are still trading, as you can see, like the market pretty much stuck in this range where it's been trading since about February of this year. So yes, lots of up and down action, but at the end of the day, market has been trading in this range. So yeah, eventually we might have to decide, or the market will have to decide which way it wants to go. Obviously, bears would want to see this break, and anybody who's bullish would want to see the market break out. And since we are still range bound, it is tough to decide which way eventually it resolves. On the monthly chart for the S&P 500, we see that it just needs to hold and defend 69.1 level on the monthly chart. As long as it can defend the 69.1 level, the market might have a chance of trading higher. As of right now, we are trading below 69.10, which opens up the possibility for lower prices. So that's the number to watch. whether the markets are trading above or below 69.10. SPX is trading below that. We take a look at the Dow. We can see that on the Dow monthly, it has been trading below 69.10 over the last 3-4 months. So this could be a problem. It just means that it could be open to lower prices. If we take a look at the NASDAQ, you see that the NASDAQ is one of the major markets that continues holding above 69.1, at least giving those who are bullish some indication that the market is not looking to go down. So as long as the NASDAQ is holding above 69.1, the market should be okay. Otherwise, generally we seem to be range bound, and really it would be a stretch to try and decide which way this market wants to go. As you can see from the NASDAQ weekly, market's been trading in this tight range over the last couple of months right there, and until we can resolve either away from this range bound situation with a move lower for a break and a push lower, we don't know, or if the market is eventually going to decide to break out for another move higher. Of course, we don't know. We have to wait for the market to tell us which way it wants to go. But you can make a case either way, and that's pretty much the concerning thing. Is you can make a bearish case right now, and you can also make a bullish case. Eric Muathe.com. Good luck, peace, and blessings. EACS. Enjoy your weekend. I am out.